Alright, here we are. Let's see here. Alright, give everybody a minute to get on here. I don't think we got, well, we got one person on here right now. What's up, Cody? You hear all that background noise? Can Cody put me a comment on there if you can hear me? You can hear me alright? See the screen alright? Alright, good. Alright. Alright, we got two more, or another one. I guess that's going to be Dennis. Alright. You the other person on here, Dennis? Alright, cool, man. Alright. So let me look back. Let me look at our messages that you was asking about, Dennis, and let me see what so alright. So we was looking at you had SPX pulled up, yeah, SPX. So you had SPX. You had SPX pulled up, and you had the 9 December. So we'll talk about this trade real quick, okay? I'm going to go over a little bit about this trade if you want. Alright, so... Alright. Obviously this is an options chain. I guess you're familiar with it, you know, since you've done a little bit of trading before. So 3680s and 3675. Okay, so 3680 and 3675. So this is the trade that you had in your phone that you sent a picture of. Cody, that's the best that I can do on the screen. So this is the trade that you had on your phone, and let's just do one contract to make it simple, okay? You had the 3680, 3675 put credit spread pulled up, okay? So what this means is it means that this is going to be your risk graph right here, okay? Now, you're going to be selling this spread, okay? So, the whole point of you selling this spread is so that the S&P 500 will be above your short strike upon expiration, okay? And when I say short strike, that's going to be the strike that you're selling, which is the 3680. So as long as S&P 500 is above 3680 at the close on December 9th, then you're going to keep all that money right there that you sold that for, okay? And that's what I was telling you about, you know, like if you do the SPY and you do a $1 width, well, see, that's $5 width right there. And so that would require $500 in your account to be held for that trade. Okay, so if you had $1,000 in your account, then you would be able to sell 2 of them, and that would give you $130. All right, and I mean that's not bad. You know, it's pretty good. That'll be about 13% return on your capital is what you'll be doing. So like I said, as long as S&P 500 stays above 3680 upon expiration on tomorrow's date, then you will keep 100% of that credit. Alright. Now on the flip side of that, okay, if the S&P 500 goes below your long strike, then you're gonna lose $870, okay? And the reason why it's $870 is why? Because you took in $130 credit, right? So whenever you sell this spread, that $130, that's going to be transferred into your account. All right, that's going to be credited to your account. So that's going to be your money at that time. And going back to expiration, as long as we stay above 3680, you're going to keep that $130. Okay? And if we don't, then you'll lose $170 if you do a max loss. Now, a lot of people you don't want to do a max loss on these trades, right? Because there's going to come a day where you're going to get a bad trade, and if you take a max loss, then it's going to set you back pretty good. So a lot of people, what they do is they'll set stop losses of like 2 or 3 times the credit received. So if you do this trade and you put in a stop loss of 2x credit received, then if this trade goes against you and the value of the trade becomes $1.30, then you're going to exit the trade for a $65 loss. All right, you understand how that works, or you have any more questions in regard to those spreads? And one thing that I want to say too is that 3680 that you picked, let's look at it here. So 3680, that's going to be a 20 delta. Okay, that's pretty that's pretty aggressive. I personally would not sell that. I would go more so down here around around 10 delta um, for my short strike. Okay. Um, Even 5 deltas. I like to sell 5 deltas because here's the thing, man. Like, the whole point of this is to make money with high probability trades. All right. And if you're doing 20 deltas, then that's only giving you about an 80% chance of that trade being successful. Whenever you can come, you know, down here another couple strikes and do, a much higher probability. Now, what's going to happen is your credit that you get for that trade is going to be less. So like let's do it. Let's go down to a 9 delta. So if we do a 5 wide 9 delta, see, you're going to be getting 20 cents or 20 bucks, however you want to look at it. But you know, that's a very high probability trade. And if you're going to do a lot of contracts, then you need to be as conservative as you can, because I mean it'll blow you up if you don't stick to your stop loss. So um, just keep that in mind if you go to try and trade these, because it could really get you sometimes. Another thing that I like to do with like smaller accounts is do like a 7 day until expiration. So like okay, the Greeks matter when it comes to spreads. We would look for smaller deltas versus the typical wanting big deltas when buying naked. Yeah, that's correct. So right, whenever you're buying naked, like single legs, you want a high delta, right? Because that's gonna give you more money as the stock moves in your direction. So yeah, the lower the delta on these short strikes, the higher probability that you're gonna keep all of your credit. So yeah, you're exactly right on that. That's exactly what that means. So if you look at like I said, for smaller accounts, you can do these 7 DTEs. Well, I mean, this one was 6 because the day's already over with for the day. But if you come down here and you do a 10 delta, that's a 3600 strike put. If you do a 10 delta and you do 5 wide, that's 30 cents right there. I think that last is 340. So, and you'll probably get better. You'll definitely get better than that when the market is open. With the market being closed, these prices are kind of off, but you would definitely get better than 30 cents for a 10 delta on 7 DTE. But yeah, that's a really good way to build up small accounts. But like I said, like for a very, very small account, like I don't know, $100. If all I had was $100, and I was going to do the most conservative, high probability trades that I could, and try to earn, I would want to earn like at least 10% a week, right? I mean, if you can earn 10% a week, that's really, really good. I would do SPY. I would do SPY trades, and I would just go through here and I would find what trade could give me that 10%. Okay? If I wanted to do 7 DTE, we'll come down here. What is a $1 wide? So if I do that, it's going to be 5 cents. I mean, I probably wouldn't do that. I would probably move up, a little bit. Let's see what a 14 delta is going to give me. 8 cents. And you'll get better prices whenever the market is open. These prices are garbage right now because the market's closed. But that's the way I would build up a small account. I would try to do 10% a week, which you could do it on the 0 DTEs like we talked about. And if you did that, if you did it on the 0 DTEs, you're having 3 occurrences that, during the week. So you only really have to make what, like a little under 3.5% per trade, you know? So you can easily accomplish that on 0 DTEs. And that adds up over time, man. I mean, that really adds up a lot. Let's see here. Let me pull this planner up. It's just like, let me bring it over. That's just like, if you started with, we'll say, start with $500, okay? And you do SPX and you do one wide and you choose to try and collect 25 cents a contract. I mean, you're, let's see here, if we do 5 wide, you're gonna get, you're gonna make 60% the first month total. You're gonna make 135% the next month. In a year's time, man, that adds up. If you stick with that, so what's going to happen is, though, I think we might have already talked about, whenever you get down here to month, probably about right in here around month 8. Whenever you get to around month 8, you're going to want to change your strategy up a little bit and kind of go to a wider spread and stuff like that, because you're going to run into issues on some of these fields, man, especially being out of the money. Like, there's no way that you're going to be able to get 400 contracts like that, so you're going to have to widen your spreads out, and that'll have an effect on your returns, but not by much. I know you see a lot of people in these Facebook groups. You see a lot of people in these Facebook groups who they YOLO their whole account, and that's really not good, They show you these big wins on these lottery tickets, but I guarantee that couple $100 that they have in those accounts, that they're losing a lot of that pretty frequently. So just be cognizant of that and don't let it get to you, because it just takes a little time to build it up. So just have to have a little patience, Is there, does anybody want to look over any specific tickers? Does anybody want to look at any companies that y'all are interested in, and we can take a look at them and we can talk about them? Well, we can talk about a few real quick. Let me see here. Let me pull one up. What's a good one? Okay, well, here's one. Microsoft. Can we go over the stop loss one more time? I had my neighbor come over and only caught a glimpse of stop loss. Okay. Yeah, man, we can do the stop loss. All right, Cody. I will look at I'll look at Caterpillar here in just a second as soon as we go over the stop loss. Okay, so the stop loss, if you let me bring your trade up. Let me bring it back up again. All right. So let's bring this trade up. What do you have? I think you had the 3680, 3675. Okay. All right. So, all right, Dennis, this is the trade you had up. Okay. Now right here, if you look, you're collecting 65 cents per contract. Okay? That's what is called credit received. Okay? That's going to be the maximum gain that you can get off of this trade. So what I was saying was, a lot of people, they'll do like they'll do like a three times credit received or a 2 times credit received stop loss. So what that means is, if you sell this spread for 65 cents, okay, and this is a put spread that you're selling, so that means that you want the market to go up. If the market does not go up and it goes down, that will increase the price of the spread, and therefore that will give you a loss. Okay? So if the market goes down enough to make this spread, we'll start with 2x credit received, then that means that whenever this spread is worth $1.30, you're going to exit for a loss. Okay? So you'll lose $65 on that spread. Now, if you do a 3 times credit received loss, you're going to exit that spread whenever it gets to $1.95, and you're going to have a $130 loss. Alright? Does that kind of answer your questions on that? As far as your stop loss and how to set it up and stuff like that. I personally, a lot of the times, I'll use 3 times credit received a lot of times. Sometimes, depending on what level volatility is at, I will do it a little bit different and use support and resistance levels, because there's sometimes whenever things are really, really volatile that the pricing will be really, really crazy, and it be nowhere near your short strikes. So there's really no reason to get out of that trade at that time. It's just something that will come with experience doing these kinds of trades. And I mean, you'll figure that out sometimes whenever you see it and you compare it to the price action. All right, so Cody was asking about Caterpillar. Excuse me. All right, so Caterpillar. Man, Caterpillar's been on a tear, hasn't it? Let's take these off. Oh man. So I think that Caterpillar is going back to, probably it's going to go back to about 183. And then after that, I think that if we can catch a bid, I think that it'll go to about 186, I think. If it comes back up here to the 183 area, that's going to be retesting its all-time high, which that should provide a little resistance. But after that, the 186 area, if you look over here, it's going to be kind of a pivot point. It's going to be a pivot point calculated off the weekly, so that'll be the next logical place for it to go if it can break through 183. Now, one thing that I'm kind of discouraged about right now is, man, this right here. This from this candle right here down to here, I don't like that. I don't like that at all. That kind of makes me think that we're going to come back down here to 177 and test it again before we take off. This daily candle, it kind of closed, looks kind of weak. I really wish it would have held above 180. But if you go far enough out in time, then you should be okay. It shouldn't be an issue. I would go at least 30 days, and I would really be watching the 177 level, about right in there. If 177 starts to break, then you need to really be careful. The trades that I have on for Caterpillar, they expire December 31st. So that's I mean, that's a little ways away. I'll just have to see how it acts at 177. Like I said, if it gets there, I mean, it's 23 days for it to move a little bit, so it should be okay. Okay, so Miguel asked about Tesla. Let's look at Tesla. Man, I like Tesla. Oh man, look at that. So, all right, Tesla, I have been tracking this consolidation pattern right here for a while now, as you can see, and it was consolidating all the way at the beginning of September, all the way till about mid-November. It was consolidating. Yeah, Miguel, it's going up, up, up. Yeah. And man, right here we had a little fake out. See how it kind of came up above that upper trend line and then boom, came back down to test the lower one. So it was a little fake out. Test it again. Come down here, test again. And then bam, we finally broke it. Gapped up hard, broke this. Man, right there, if you was watching it, that was your buy signal. Alright, that was when you wanted to buy, because you would have made bank. I played Tesla. Where did I play it at? I think I played it in right here. In this rise right here is where I was playing it at, and I made a pretty good profit on it. I'm kind of disappointed in myself because after this pullback right here, and I'll show you over here on the hourly chart, this pullback right here, it came down and it tested 540 again, and I knew that this was a good zone to buy. I knew it was going to pop back up, but I was expecting one final push back down here to about 560, and at that point is the point that I was going to get back in, but it never came. I waited and I waited, and I seen it, creep up here, and it almost tagged 600. It almost broke 600 in here, and then it came back down to the 580s, and that's where I picked it up at. Picked it up right in here, caught this ride, and I'm still in with some more spreads that expire. I don't know, January I think is when they expire, and they're looking pretty good. I think Tesla's gonna touch 700 really soon. Um, it's definitely gonna go. I think. I mean, I could be wrong, man. It could just fall off a cliff tomorrow, but I think it's gonna hit 700, and I think we're gonna get a little pullback. You know, a decent pullback once it does. And then after that, once we complete that correction, I think it's going to take off, and we'll see $1,000. I mean, you'll see in the year 2021, you're going to see Tesla at $1,000. I really believe so. Um, Dennis, you asked about the video that I sent you. 40 set the cost of trade to 40 cents. That's something we do for every cost of spreads. No, that's not. That 40 cents, you don't really need to read too much into that, because and I'll have to go back and watch the video again and see why I did that. I don't know if that was me adjusting the trade or something. We might have been trying to get in a trade and it wasn't filling, so I brought it down, or something like that. I'm not sure. I'd have to go back and watch that video that you're talking about. But a lot of times your credit received, it'll depend on a lot of things. You know, it'll depend on where we're placing the trade at, how high is volatility, you know, just different things like that. So, you know, it's just something that you really have to keep in mind. It's not going to be the same every time. It's used as a tactic to get in the trade. Yeah, I mean, if we're looking at a trade and we're trying to sell this spread for 50 cents, and it's not getting filled, then we'll move that down. You know, we'll move it down to 45, and we'll try and get filled. We might move it down to 40 and try and get filled. You know, you don't want to keep on moving it down and down and down until you're not really getting any credit. You know, you might as well just try to find another trade at that point, because it's not going to be worth your while. But yeah, it's just a way to adjust your trades and try to get in a trade or get out of a trade or whatever. Another one that we can talk about real quick, one that I like Apple. Apple is gonna be a nice trade, but be careful, because it might not go our way. So I failed to pick up Apple at the break of this consolidation triangle that I was watching. That was a really weak daily candle right here. We broke above it and we pulled all the way back. And look at this. This is what's amazing. Let me maximize this one real quick. So look right here. Look where we closed at. We closed right below that trend line. I mean, that's pretty amazing. So one thing out of Apple, I would be careful. 125.39 is going to be the high of this candle right here. Okay? Before I get into Apple long, let me say that. Before I go long on Apple, this thing has got to break this area, and it's got to break it good. It's got to prove to me that it wants to take off, because there's a good chance that we come up here and we tag this area and we pull back. There's a good chance of that. So it's need to really be patient and let Apple do its thing. If it breaks above here and shows that it wants to go, man, I think I think 131.5 will be the first nice setup, and then after that it'll be new all-time highs, I think, on Apple. But just be careful, because there's a good chance that it comes back down. It all really depends on what is going to happen with the indexes. Are we going to get a Christmas, a Santa rally or whatever? You know, I don't know. That's just something that you're going to have to be patient on and watch, because you don't want to get caught on the wrong side. Okay, now here's a good one too. Look at Amazon. We'll go over here to the daily chart again. I'll zoom into this area right here. So as you can see, what do you notice about a lot of these that we've been watching? They've been consolidating for a long time. They've been consolidating after this big run up from all the COVID lows whenever the market sold off, and they've just been kind of moving sideways, and they're ready to do something. Okay, they're ready to go one way or another, and I really like Amazon. I think Amazon will be a very good money maker. Right now, if you wanted a trade idea, I would be selling put spreads down here. I would be selling them down here below the trend line first. I would be selling them below this support level next. And if I could get a decent credit with my days to expiration, I would be selling them right down here in this area right here. If you wanted to do like a 7 DTE trade on Amazon, and you wanted to sell put spreads, you could come down here and you could sell like if you could get a decent credit out of a 3,000 short strike, that would be an awesome trade. That would be pretty good. I bet you that, I mean, I don't know, 3,000 on a 7 DTE, that might be somewhere around a 10 delta, maybe. I don't know. Let's look and see. What is that going to be? If you do, so, I mean, you have 10 DTE. What do we say, 3,000? What's going to be our delta? So 14 delta. I wasn't close. I was 4 off. So that'd be about a 14 delta. I would be cool with that. I would sell that all day. Boom, $1.20 credit on a 10 wide. That's going to give you 12% return on capital in 10 days. That's a good trade. I would take that. I would not take any less than $1. I would definitely not take any less than $1. That's a good trade right there. I like that. Let's see. We went over Caterpillar. We went over Apple. We went over Amazon. We went over Tesla. We talked about some of the credit spread stuff. Does anybody else have any questions at all? Anything? Because we're about to start wrapping this up if nobody's got any more questions. Oh, I wanted to do something else too while we're on here. I want to so this is the platform. This is the Tactical Trading Services platform here that we use to send out all of our alerts. I just kind of wanted to, you know, give a quick glimpse into it. We have different chat rooms here for different things. 0 DTE trades, that's going to be our day trades. Trading floor. Trading floor is just going to be somewhere where we can talk about whatever. It doesn't have to be, you know, anything. This is open for all members to chat back and forth. Swing trades is where I send out the alerts, and this is what my alerts look like. So right here you'll see that it's sell, and there's the ticker, the entry price right here that we want to get. Here's our short strike, here's our long strike, and whether it's a call or a put, and then there's our expiration, And if we're doing a credit spread or iron condor, or if we're doing a vertical debit spread, I will put the potential return right there. So like this one right here, you know, you'll get about 12 to 13% return on your capital, 14.4% return on your capital. This is a vertical debit spread that I sent out, and those short strikes are wrong. They should be $100 less, which I mean, people should be able to know that, but you know, you got a potential 53% return at expiration on that. But yeah, I used to do some daily market analysis, where like what I would do is I would list any news events for the day. I would list a couple support and resistance levels for the S&P 500, and I would list the highs and lows of the overnight futures. And I've kind of slacked off on that, but that's something that I've been thinking about starting to do again. But yeah, that's just kind of where the magic happens, I guess, you know. And there's some economic calendars over here that you can look at and play with and change. So it's pretty cool, you know. It's pretty nice, pretty good thing that we have going. Miguel, when you send alerts, how much time do I have to take them? So if it's a day trade, if I send out a day trade, it needs to be opened up pretty quickly, because day trades move really, really fast, and it's important to make sure that that you're in them whenever I call them out, or else you're gonna get caught on the wrong side of the trade. The swing trades, there's a little bit more cushion. Sometimes you can get in swing trades the next day if you want to, a couple hours after I send the alert, you know, whatever. Because a lot of times on the swing trades, you know, you got a lot of time before expiration, so at the beginning of them, the price isn't going to move all that much, I guess. So this was a good trade today. Let's look at that one real quick while we're here, because I really like that one. Let me put it in here real quick. So it was on a ticker called Snowflake, and it expires. I went pretty short on this one because I was expecting a pretty good pullback. And I sold calls. I sold 500, 520, 500, 520. Yeah, so look at that. Okay, so over here on the alert, I sent this alert out whenever Snowflake was, this credit spread was trading between $1.20 and $1.30 is what it was trading at. And I sent that out today. And already today, this thing is down to 25 cents. So that is a nice return. If you would have sold 10 of them, then, I mean, you'd already be up $1,000, you know, just on that one trade for the day. So, I mean, that's, you know, sometimes you have swing trades that really move like that, you know, and I feel like if you're in the service and you're looking at these trades, if you have any question at all about whether you should go ahead and jump in them or not, then I mean, you can message me and ask me if my outlook is still the same, if it's still worth getting into at that point, because sometimes you just need to move on to the next trade, and that's all there is to it. Oh yeah, look at this candle. This is Snowflake. This is the one that we sold calls on today. Look at this, man. This is excellent for a pullback. Oh man, down to 340. Bring her down. That would be nice. Yeah, she'll come back down to about right in there, I bet you. Let's do this. Let's put a price level right here. let's put a price level to 340, and then the next time we go live, we can see what it does. We can see where it went to. I think that'd be cool. So even if you short it right now, man, that thing was at 390 at the close. If you short it right now, you're gonna get like a 50-point short if it gets down here, if you just buy puts. But yeah, I don't know. Heck, we might get up tomorrow and the thing be 1,000. Who knows in this market? This market's crazy. Awesome. Yeah, anytime, Miguel. Okay. So, I think we had a good session, man. I think we did pretty good. We're about 45 minutes in. I guess I'm going to go ahead and start wrapping it up if nobody else has any questions. I'll give everybody a minute to kind of send in any questions. If you have any, let me know. I'll give it a minute before we get off here. Alright. I don't guess there's any more questions. I hope that... When will the next session be? The next session will be... man, I don't know. Maybe this weekend, maybe later this week. I don't know. We'll set something up, and I'll try and plan it out where I can put a notification on the page. Maybe the day before. I'll put a notification the day before out there, and then I'll do another one a couple hours before I go live. Dennis said I'm good, got the answers I needed, thank you. Yeah, man, no problem. I'm glad that I've been able to help you out. I hope that you really check out all the educational content that I have, because I think it's really good. Anybody who doesn't know about it, I hooked Dennis up with our playlist for our education. So if you go to tacticaltradingservices.com, okay, it's gonna pull up the page. This is gonna be the home page right here. Okay, enter in your email, your first name and your last name, and if you hit get free access now, it will take you to a page where you can enter into the educational content, and it will also send you an email with a webinar that I did, and there's a lot of information in there, so that's for you. It's free. Check it out, learn something. I hope that it helps you, because I spent a lot of time putting it together, and I just wanted to help people if it can. And like I said, if you ever have any questions about it or whatever, just hit me up, send me a message, ask a question on the page. Maybe somebody else has got the same question you do. Put the question on the page, and we'll do our best to get back with you and get it answered, because we're here to make money, man, and this is the way we make it. So I'll help you out whenever I can. Alright, well, I guess that's about it for the night. I've rambled on long enough. I hope that everybody enjoyed this. If y'all think of anything else, for the next live session, make a note of it, or send me a message and ask me, and I'll make a note of it, and I'll put something together to kind of go over it. I want these things to be, I want the live sessions to be interactive with the viewers. I want them to be educational. I don't want to just be sitting here talking about nothing. So, yeah, you're welcome, Dennis. Anytime, man. Anytime. Yeah. So I guess that's it. Happy trading, everybody. We still got a couple days left in this week to make some money in the markets. I hope that we can keep rallying. It'd be good if we do. We'll see. I don't know. NQ's kind of lacking right now. Wish it would pick it up, but we got all night. So yeah. All right. I'm out of here. If y'all need anything, then just let me know. Thanks.